Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, December 10th, 2024. Hope you're having a fantastical day out there in the interwebs. Snow is cleared. It's a little overcast, but sun's out and my driveway's clear and didn't get, it wasn't too deep out there. So, but it was real soft. So as it blew out the snowblower, the wind would blow it right back on me. So I looked like, oh gosh, I don't even know what Frosted Flakes or whatever. When I came in, I had it all over me. So anyways, hope you're having a great day. And let's see, not a whole lot going on in the news today. I mean, I struggled to really find some interesting articles to cover. But anyways, well, before we get into the markets and the news, if you could do me a favor, give me some thumbs up, a like, a share, subscribe. And like I said, share. Send this to someone you might think would get something value out of this. I know there's only 3 or 4 people who actually watch on a regular basis, but hey, if those 4 people send it to 4 people and then they send it to 4 people, then we're up to like 12. Yes. All right. Okay. Well, let's get into the markets. Dow Jones. Oh, here we are. Dow Jones was down 0.35%, 154 points, closed at 247. S&P 500 down 0.27%, 16 points, closed at 6036. NASDAQ down 0.24%, 47 points, closed at 19688. The VIX was flat today. It's currently at 1419. Canada down 0.47. Brazil up 0.82. And Mexico down 1.44%. In Europe, Germany was flat, up 0.02. The UK down 0.86. France down 1.14%. Netherlands down 0.15. Spain down 0.38. Italy down 0.1. Switzerland down 0.98. And Portugal down 0.19. Russian exchanges in the red today. The MOEX down 1.94, RTSI down 2.58. And the overnight markets, the Nikkei was up 0.55. Australia down 0.36. New Zealand down 2.09. And that was when they closed on the 9th. Let's see here in China, the Shanghai was up 0.59. Shenzhen Component up 0.75%. China A50 up 1.02%. DJ Shanghai up 0.64%. Hang Seng down 0.5%. And the Taiwan weighted down 0.64. All right. Well, that is the news of the day, or the markets. Let's get into the market news. U.S. stocks hover around flatline as tech continues to wobble and Alphabet shines. All right, U.S. stocks traded near the flat line on Tuesday as tech sector turbulence balanced out gains in other areas of the market. Investors await key inflation data that could shape the Federal Reserve's monetary policy decision later this month, i.e. next week. Tech sector struggles. Oracle fell over 8% following fiscal quarterly earnings that missed expectations due to intensified competition in the cloud computing space. In contrast, Alphabet gained 4% after unveiling its Willow quantum chip, signaling optimism in the tech giant's innovation pipeline. All right, inflation data is in focus. The upcoming CPI, Consumer Price Index report, set to release on Wednesday, is expected to influence Federal Reserve rate decisions. Economists forecast a slight raise in headline CPI to 2.7 and year-on-year from 2.6, while core CPI is anticipated to remain steady at 3.3%. Remember they declared victory on all this inflation a few months ago? Doesn't appear to be it doesn't appear to be continuing in a downward direction. So, and we haven't seen any deflation anywhere. Well, except maybe in oil prices. Earlier in 2024, inflation had declined steadily, but has recently become more persistent amid a robust U.S. economy. Markets widely anticipate a 25 basis point cut at the Fed's next meeting, but uncertainty looms over the long-term trajectory of interest rates, particularly with potential inflationary policies under incoming President Donald Trump, because there was no inflation in the Biden administration and definitely no inflation in Trump before him or Obama. All right, some corporate highlights. Eli Lilly stock remained flat despite the announcement of a $15 billion share buyback and a dividend increase. Alaska Air surged 13% after raising its Q4 profit forecast, driven by strong travel demand and improved pricing. The airline also provided a robust 2025 earnings guidance. As investors brace for Wednesday's CPI report, market sentiment remains cautious, with inflation concerns and policy uncertainty continuing to shape expectations for the months ahead. All right, so that's that. Let's get the next article up here. Trump tariffs could spark supply chain disruptions, experts say. I even saw an article where Janet Yellen was saying the same thing, because we always trust Janet Yellen because she was so correct on all the inflation stuff a few years ago. All right, President-elect Donald Trump's proposed tariffs on imports from China, Canada, and Mexico are expected to significantly disrupt North American supply chains and global trade. Trump has announced a 25% tariff on all goods from Canada and Mexico, and an additional 10% on Chinese imports, citing efforts to curb illegal immigration and drug trafficking. Experts warn these measures will increase costs, disrupt supply chains, and exacerbate inflationary pressures. Well, maybe if we made things here in America, you wouldn't have all these problems. I mean, there was some, what was it, last night I was listening to something, they were talking about the Abrams tank that I believe it's the Army, uses. And, a good portion of these supplies and parts that are used to make this are made abroad. Not very smart. I mean, a lot of people will poke and laugh at the Russians for, their lack of innovation and technology, but they do everything at home. So, while they may have their own issues, supply chains for their military is definitely not one of them. All right, North American supply chain under pressure. Many U.S. businesses, particularly in the automotive sector, rely on integrated North American supply chain. Companies like C.H. Robinson report clients are already assessing risks tied to these tariffs. The automotive, apparel, and consumer goods industries are likely to face the steepest challenges, as tariffs on these items will significantly raise consumer prices. The proposed tariffs could intensify supply chain shifts. China's share of U.S. sourcing has already declined, with countries like India and Vietnam gaining prominence. However, experts note that no single country can replace China's manufacturing capacity, making diversification efforts costly and complex. Economic and consumer implications. Higher tariffs would lead to increased costs for businesses, many of which will be passed on to consumers. For small and medium-sized businesses, the financial burden could be particularly severe, reducing profitability and consumer spending power. The National Retail Federation predicts American consumers will lose $78 billion annually due to these tariffs. And logistical challenges. The e-commerce logistics industry, already strained by labor strikes in Canada and the U.S., face further complications from the proposed tariffs. Small and medium businesses lacking resources to adapt are particularly vulnerable to these economic shocks. Trump's tariffs, although aimed at addressing geopolitical concerns, risk deepening economic challenges for businesses and consumers alike, potentially triggering widespread inflation and supply chain disruptions. I don't know if it really would cause inflation. It certainly could cause, price changes, obviously. But, if we're not increasing the money supply, I don't know if that is truly, because it's not that we have too much money chasing too few goods. It's that the prices are going up. So, all right, last article here from Investopedia. Big changes coming to Obamacare, how Trump's administration could impact your coverage. President-elect Donald Trump is expected to implement significant changes to the Affordable Care Act, the ACA, and health insurance marketplace without attempting to overturn it entirely. Key areas of focus include premium subsidies, cost-sharing alternatives, short-term insurance plans, price transparency, and enrollment processes. So up first, expanded premium subsidies expiration. Enhanced subsidies under the Inflation Reduction Act, which have made marketplace premiums affordable for many, are set to expire at the end of 2025. Without renewal, many may lose access to affordable health insurance, potentially decreasing enrollees from 21.3 million to 15.7 million in 2026. Republicans argue these subsidies inflate costs and contribute to the deficit. That is true. If the government would get out of the healthcare business, it probably would bring the price down. It's the Medicare and Medicaid that make everything so expensive because you have to have such a large staff to handle all the paperwork for dealing with it. But hey, the mailman's here. He's got chains on his tires. All right, health savings account as alternatives. Proposals aim to replace cost-sharing reduction programs with HSAs, allowing beneficiaries to cover diverse expenses like vision and dental care. While HSAs favor younger, healthier individuals, critics caution against their suitability for those with chronic health conditions. Expansion of short-term insurance plans. Trump may reverse Biden-era restrictions on short-term plans, extending their duration up to 3 years. These plans are less comprehensive, but offer a cheaper option for those unable to afford standard ACA coverage. Increased price transparency. Trump could strengthen enforcement and health provider price transparency rules, fostering consumer choice and competition. Stricter enrollment oversight. Fraud prevention measures may include limiting automatic re-enrollment and tightening subsidy recapture regulations. Brokers engaging in unauthorized enrollments face heightened scrutiny. And last, reduced navigator support. ACA navigator funding, which helps consumers navigate coverage options, could face cuts, shifting the burden to individuals or insurance agents. Well, people are not helpless. They can handle things themselves. With these changes, Trump's administration aims to reduce government spending, increase consumer responsibility, and address fraud, but critics warn of potential access and affordability challenges for millions of Americans. Well, maybe they should get better jobs so they can afford their own health care without having to be subsidized by the federal government. That'd be my suggestion. But what do I know? All right. Well, that's everything I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. Be happy to help. All right. Well, I've got some more continuing education I got to knock out this afternoon and working on the rest of the week. So if anyone needs anything from me, like I said, go to the website and book a meeting. Otherwise, have a great evening, and I'll talk to all y'all next time. Adios.